Describe the current fall in the small and mid-cap stocks in one word.
Trump.
Was that a correction? The thing recently happened.
That was a correction, that was a pivot, that was a lot of sentiment, nervousness as well. Whenever there is uncertainty, people just start selling. Kuch bhi ho jaye, AI can do anything, say, but they cannot take a license with selling.
So is there any company in your folio right now who has given you multi-bagger results in the pre-IPO stage?
There are a lot of companies.
Why don't you give us a...
So how do you actually think clearly in this kind of market? This is Rajat Grover and welcome to Minutes with Elite. Our guest today has over 2 decades of experience in the markets and wealth management. He started with Citibank and Kotak Mahindra Bank and is now the CEO and co-founder of Green Portfolio, managing over 1,000 crores of money. Let's welcome Mr. Divam Sharma.
So Divam, 5 years ago, back in 2019, we started our communication services. Then we shook hands with you at that time. And when we were starting the BFSI department at that time, providing the services to all the banking, finance services and insurance companies, you were our initial clients at that time. Today as well, like initiating this, and then again you are the first guest out there. Now you tell me, Divam, starting from 2019 to right now in 2026, you build a lot of things. Firstly, PMS, small case, AIFs, a lot of things that you have built in between. How has the journey been so far? And how you met your co-founder Anuj Jain as well?
So first of all, thank you so much, Rajat, for having me here. I think it has been a pleasure all throughout this journey. I think you have helped us grow a lot over these years, and goes without saying your commitment to your work, how you have built your business. It has been fantastic. I see the kind of zeal that is there in your team. I think it is fantastic. And goes without saying, we have grown a lot with you, and it is a lot of thanks to you that you have helped us scale our commitment, our reach to our investors over the years. You have guided us a lot in a lot of aspects. I think
Thank you so much. Really kind of you.
Yeah, so I think the kind of growth that we have done over the last few years, it is a lot about communication. When we came to this industry, I think we were told that, hey, you are not a known face in the industry. People do not know you. How would you create a mark? How would you get investors' trust? How would you get investors into your business? So it was not that easy. And creating that goodwill of yourself, creating that face of yourself is a lot of commitment. It's a lot of groundwork. It's a brick by brick kind of an exercise.
Absolutely.
And that kind of an exercise, having the right team with you, I think that helps a lot.
Absolutely. Yes.
Over the years, we have built our content team. We have built our team who helps us with understanding marketing. But a partner is very much required, who is a professional in this journey, and that you guys have helped. So I and Anuj started off. We had passion of markets. We knew stocks. We were investing in stocks. Our families were investing in stocks. We wanted to do this as a professional journey. And that was the beginning point. We did our CA together, and during our CA internship, we used to interact a lot about markets. And that passion continued, that conversation continued, and that ensured that we have to start off something in this. Green is a name that we took. I think luckily that back then green energy and all that was not there. It was markets in green.
Markets.
And we got this name, and I think it's a very generic name that we got. And we started this, right? So we did not know what to do in this field because we were not known in the markets, right? We were very new to the markets. We were never there in the media. We did not have a history of managing funds professionally. We were doing it in the family, right? So initially we got some friends and family clients who trusted us because they had seen us in the past on how passionate we were about the markets and how we were tackling the markets, investing, making money. So we got some initial friends and family money. Then all throughout the journey, initial few years, we did fairly well. Initial few years, if you see a very rosy picture, you get spoiled. But initial few years, we did not get a rosy picture, right? We got a lot of hiccups initially. I remember when we also met, I think COVID came.
Correct.
Right. And it was not an easy time, right, for all of us. We initially got COVID kind of times, but you have to pivot all the time, right? All these journeys, you have to pivot. So Initially, we were doing well. We were performing well. We were coming on PMS Bazaar and other areas where we were performing
You have been
well.
the best performers out there in PMS Bazaar as well.
Yes.
Yeah.
Yes.
There was a Super 30 folio that you have maintained out there, I believe,
Yes.
right?
Yes.
At that time.
And then thanks to you again, Super 30. We were the best performing fund in India in that year. And communicating that is also a very big task, right? So you guys helped us reach out to the right investors with that story that hey, these guys have done really well, you should evaluate them as a fund manager, and we got a lot of investors post that.
Lovely.
So
I still remember the heading of that and about Super 30 fund. It was fabulous out there. I mean, the returns, I think how much was the returns?
it was more than 120% in that year. It was a like crazy market as well, because after COVID you were coming out of a bad time and the markets were roaring, and you saw a great return in the markets as well. But outperforming with such a big number was definitely an achievement.
That's amazing. Your philosophy has always been so rewarding, Divam. Tell me more about, to our audience as well, who is watching, retail investors or ultra HNAs or anyone in the markets or who is an entrant into this ecosystem. How has been your philosophy so far? What actually you do that actually give us rewarding returns in the market? What actually you see what other players are not seeing in the market?
See, I think it is a lot of discipline. When we started off, we used to experiment with everything. We used to do futures and options. We used to buy penny stocks. We used to do a lot of things. We burnt a lot of our fingers. But gradually, as you evolve, I think you should have things in discipline. You should know what you are doing. Yes, you will pivot in various levels because like if you see AI is coming right now. You are pivoting right now, right? In terms of a lot of your thought process. But you cannot change your style every now and then. So first of all, it is a lot of discipline and consistency. And for that discipline, you have to be ensuring that with various turns in the market, you are not changing your stance.
Exactly.
Right? We saw a lot of those times like in 2019, 2020, when a lot of people came to you and said that, hey, why are you investing in the broader markets? We call it small and mid caps right now. So why are you investing in small and mid caps when it is such a bad market? Even in 2018-19 when we started off, long-term capital gain tax came, and that was a bad time for the markets. A lot of small and mid caps were doing very bad. So first of all, you have to have your forte. You have to create a forte of yourself. You have to create a position of yourself in the market. We thought that, hey, we are a small fund in the market. How do we differentiate ourselves? Can we differentiate ourselves buying very large companies, be it Reliance, L&T, Wipro, TCS? Can we differentiate ourselves? The answer was no, because for anyone who knows about the markets, they can directly buy these companies. Right. It is not a rocket science in evaluating many of these companies.
And they can have like 12% CAGR or something like that.
Exactly. So how do we create an alpha in the markets is by differentiating ourselves, bringing below the radar kind of opportunities for the investors, initially creating a brand for ourselves that, hey, these guys are stock pickers. So we tried to evolve ourselves as stock pickers. We tried to bring in small and mid cap opportunities, which were below the radar. A lot of funds were not buying, and when these funds were buying, we were exiting. So when they were buying in big values, we got exits at that time, and we made money.
You entered at the right time then.
Yes. So I think that was the strategy, and to keep a disciplined kind of approach. Like in a lot of these stocks, sometimes you see drawdowns. Sometimes you see that the value 100 rupees becomes say 70 rupees, and then that 70 rupees become 200 rupees as well. So how you keep discipline in various markets, how you keep a continuous touch on the stocks, how you continuously evaluate the stocks, how you go on the ground and try to evaluate the companies. I think that differentiates you. So creating processes around it, we did a lot of exercise in building teams who understand our DNA. We've got people very ground up who were either chartered accountants or CFAs or MBAs who were wanting to do something in this industry, and we trained them very ground up, worked very closely with them ourselves, and it has been our passion as well. So we worked very closely on the companies that we invested in, and then keeping it very disciplined, right? Keeping a very disciplined approach as to you would get volatilities in the market. You have to stand still. You have to continuously evaluate. If there is a fundamental reason for the volatility, or if there is a permanent impairment in the stock, then you have to exit. But otherwise, you have to stay invested. So we did a lot of those exercises and then created very disciplined portfolios. Did a lot of risk management where we diversified the portfolios for the investors. We did staggered buying. We exited at the right times also. In fact, in certain cases, we exited and after that also the stock multiplied manyfold. But we had to exit and book profits, and we have to look at that, hey, our valuation standards are met. If they are met, we had to move out. So we did a lot of things with discipline. We bought with discipline. We continued our evaluation with discipline. We built our team with discipline, and we exited with discipline. I think all that ensured that we build a very sustainable kind of an environment in terms of fund management. And I think that journey is still continuing and that journey is still evolving. I think new things are coming up and they are setting up new challenges for us. And I think these are opportunities that are coming up.
No, absolutely. You mentioned it very rightly. I mean, back then in Dubai as well, we were discussing that, Rajat, earlier we were doing a lot of research. Our 90% of time were going in the research part. But today when AI comes in and our teams, 90% of the work is going somewhere else right now, but not in the research part. Obviously not in the research part as in because AI is helping them as well right now. The productivity has so much increased. Do you think that AI is helping the firms like you right now? And that 90% of the time where you are investing right now, is it in AI or is it on ground or is it where?
There is a lot of talk about AI now, and I think this is changing. This is pivoting. This is a pushed kind of a change. It's not an organizational change, it's a world change, which is pushing a lot of systems to a new level. I think when computers came in the first hand at full scale, say in the early 20s, 2000s or late 1990s. So there also a lot of people used to think that, hey, what would computer do? But then a lot of businesses were built around it. I think a lot of jobs were created around it. And I think this is the time where it is a pivot time and we are sensing a lot of opportunities around it, especially as a young organization who have gone through all the cycles. I think this is throwing in a lot of opportunities in terms of research also. Research, we used to listen to a lot of con calls, read a lot of annual reports, a lot of research, and then we used to form our thesis. So it was a lot of reading and understanding. And now with AI, a lot of your reading is reduced, right? A lot of your content you put on AI and it gives you a synopsis. It gives you a summary, it gives you an update. So in that sense, work has reduced. A lot of potential errors possibly would gradually reduce. But I think it is not easy for anyone to give prompt on as well, because you have to have a background to give a prompt.
Yeah.
Right. If you do not understand the industry, have not gone through the grill, you do not understand investing, you cannot give a relevant prompt as well in this industry. So what I have realized is that, hey, say your work in terms of your regularly analyzing the companies has reduced. But the opportunity is now that you go on the ground, build your wisdom, build more thoughts, cover more companies. Earlier you used to think that, hey, you cover 100 companies. It is a stigma that why you covering so many companies as a fund house? How can you do that? Right? Because it is practically impossible for you to read so many companies, cover so many companies, track so many companies. Now with AI, I think we can cover 7,000 companies, all the listed companies, and very efficiently, right? Because we are getting more and more data processing is fast. And now it is more about your wisdom, how you can use that wisdom and how you can evolve your wisdom. So for that, you have to be on the ground, you have to talk more with the IRs, you have to understand, attend maybe more conferences, meet more people, understand more industries. So build more wisdom and leverage the technology to build even a better ecosystem around research, around fund management. So I think that's where we are heading. We are also evolving a lot. We are trying to build in new products around research. We are trying to build in agentic AIs around our research. So we are trying to do that, and I think it's an opportunity than a threat. And the funds who are going to use this as an opportunity, I think any industry, the people who are going to use this as an opportunity are going to do well.
Interesting, Divam. Earlier you were also mentioning about stock picking part. Why don't you tell us a amazing journey, obviously, when the stock you picked, has been turned out as a multibagger or something like that. Maybe a couple of thematic things that you could mention that, if not a stock, which has given a absolute wonderful results, like wherein our investor or retail investors would also sense that this kind of stock picking is done by a green portfolio or something?
Again, a very disciplined kind of approach, and sometimes we are also surprised with certain products or certain research potential that we do. We created a stock portfolio for dividend yielding stocks. So our thought process has been, since inception, our thought process has been that we buy less of PSU companies, because in PSU companies you get some or the other government intervention and the companies sometimes do not fare that well. So we buy a lot of private companies in the portfolio. So we created this dividend yielding portfolio. A lot of our senior citizen clients used to say that, hey, give me something where I can get some income also alongside my investment, because I'm retired and I want some income. So we created this dividend yielding portfolio for them as a diversification. Never marketed this as a main product.
Okay.
But when we realized, so there were around 3-4% kind of dividend yield on the stocks. The company had good consistent profits and they had a dividend payout policy out of their profits. So these companies used to give dividends on a regular basis, but also these were private companies and they were growing very well as well.
Yeah.
So a lot of these companies over the last 5-7 years, we saw that interest rates sometimes went very up, then went very much down, then went up, and then it is coming down. So interest rates were also moving. So we realized that with interest rate movement also, these dividend yielding stocks have a good run in many times. When the interest rate falls, these dividend yielding stocks do well, because say if the interest is 5%, 6% and dividend is 3-4%. So 3-4% you are making in dividends, and then there is a capital gain as well. So people start investing a lot of their capital into these dividend yielding companies.
And 3-4% is also a good number.
Yes, yes. In certain times we saw that even 5-6% dividend yields were there. Like in the worst of times, like say 2020, in the COVID time, we got a lot of these companies at 5-6% dividend yield. So on an average, some were even 12%, dividend yield also. So we started this in the very beginning. This product has done 32% CAGR.
Amazing.
Even last 1 year, when the markets have been bad, this product was plus 10% CAGR. So we realized that sometimes very niche, very generic, very basic products have done so well. Right. And we are talking, even right now, we are seeing a lot of disruption. We are talking to our investors that, hey, you should diversify some part of your capital into this product as well. So I think there are very interesting themes, very interesting opportunities that come along on an ongoing basis. India, you have these type of themes. In US, like over the last 1 or 2 years, you've seen a lot of theme around AI, right? Anything and everything AI has done exceedingly well, right? Lot of these companies have overnight created so much of value.
Right.
Even I was talking to you on lunch that there's a company which has been founded by Mr. Dorsey, who was Twitter's founder.
Yeah.
He laid off 40% of his employees and in an announcement, and candidly said that AI has made us so efficient that we have to lay these people off. And the stock went up 20%. So now things are going so crazy in terms of AI and in terms of all this, although it is not a good point to talk about, but I think what we have to realize as individuals as well is that we have to continuously evolve. You cannot be like, say, when computers got introduced, a lot of people did not know how to operate computers, right? And they went out of the market when they earlier used to think that, hey, what will this do to my life? But when AI is coming, you have to evolve as a professional. So all of us have to evolve. I think this is giving us a lot of opportunity. I think over the years, everybody will become more efficient. I think any industry, I think your industry is also going to leverage a lot of this AI and can go to a lot of places now. So it is exciting times for us.
Yeah, absolutely. I mean, talking about the communication industry, it is very much important, Divam, to be featured by the credible resource. Yeah. Now with the fake news, each and everything is coming up in. If a credible source is featuring you, then it will give you that kind of leverage. It builds the trust of the society. Back then, like people were only talking about, like the way you were mentioning about in the communication industry, things are changing a lot. Yes, it is changing. It is changing as in a company who were doing advertising earlier, they were promoting their own products, but now they are hiring a communication expert who asks them to feature them in Economic Times or Mint in an organic means, who knows how to write a good story out of it. Back then, like they were not doing it then in this horizons. Now things are changing so rapidly that people want that kind of credible resources to be at the top, so that if AI or fake news are coming up in, so that they will be very much secured with that.
I think infrastructure becomes a very important point in this. What I am talking to my team as well in our industry is that kuch bhi ho jaye, AI can do anything, say, but they cannot take a license with SEBI. At least that is the presumption.
Yeah.
SEBI is not going to give license to an AI
License.
agent.
Yeah.
So ultimately, किसी आदमी को आगे करेंगे to take that license and take that responsibility.
Yeah. Yeah.
Likewise, if you are having an infrastructure in terms of a newspaper or in terms of a channel that is very credible, you are going to maintain that command.
Command. Yeah.
Irrespective of the content evolving, the way the content is getting generated,
Yeah.
how efficient that content is being created. But I think that channel or that
Medium.
or that
Yeah.
medium
Yep.
is having that credibility, is
Yeah.
going to gain command.
Right.
And I think that will increase. And I think for your industry as well, it is very important, right?
Yeah.
If you are there at the right place at the right time, it creates a lot of impact.
Correct.
Right, and that's what we have seen also in the past. I think the kind of relationships that you have built in the entire
Media.
ecosystem, I think it is amazing. The kind we have also met a lot of the people in the past, and I think that relationship speaks in itself. I think that is very much credible.
You know, there is an interesting story. I was meeting a fund manager. I mean, it was just 2 months down the line. They recently launched their PMS, and they were talking about that, Rajat, we wanted to be into the communication services now because we do not have any credible resources. And at that time, I just asked one thing: how good is your face value at the moment? Because an investor will not give the money to a stranger. If a face value is good, if a person is coming up on Economic Times or ET Now or Business Standard or something that shoots up his face value out there, what actually they are doing, and that movement, like the person shifted the domain itself, like and asked to build up their face value initially, then the firm's credibility level as well. Now, when it comes to all such areas, I think a lot of things are changing, and since your industry, our industry, a lot of things that we have seen having got very topsy-turvy, right? So, Divam, there is a sentiment which is going on, which is disturbing the investors right now. The sentiment is, like the US is doing pretty well out there. I mean, obviously, sometimes it is overvalued there, and US is overvalued right now. And Trump is making a lot of changes the industry, whether it is tariffs, whether it is that hawkish Fed chair, like he has changed it. And in Indian market, the things have been going so well. The company's quarter results have been performing well. India is coming up with a lot of initiatives. FTAs are coming up in. Why the things are not moving ahead? FIIs are also very tactical. Are they bullish in the market right now or not? I mean, Indian investors are waiting to see such results. What do you have a say on that?
I think it's a very tricky situation. Even we are also trying to figure out a lot of this because it is a lot of to and fro that is happening. Initially, when Trump came to power, we thought that, hey, he will be good for the markets because initial first phase of his presidency was in a way good for India because he was after China and India was benefiting out of it. Even PLI came after that. So we were thinking that it will be very good. But when he came, actually, he bought a big surprise for everyone with the tariffs. And I think he's a very sharp guy. He knows what he's doing. And US is trying to maintain its leadership. And China is trying to challenge that. And they can't do much about China, and they're trying to pressure other countries and trying to gain access to commodities. India as a country has kept itself very calm in this process. A lot of times it has tested our patience. A lot of us have questioned our Prime Minister that, hey, why are you not reacting?
Yeah.
Why are you not saying that, hey, Trump, you saved us from Pakistan and you are a peace messiah, and why you not making that kind of statements? But I think we have kept very neutral policies, and those policies have ensured that India is where it is. I think the results of it will be seen over the next few years. I think the kind of tussle that is there, or a cold kind of war that is there between a lot of countries, India is slightly isolated. India maintains good relations with everyone.
Yeah.
That's what we are seeing, that FTAs wise we are doing fairly well. We are the ones who are signing FTAs with US, EU, UK, and everyone almost, right? So I think, and those kind of things are giving us a lot of business opportunities also.
So Divam, as you work in fundamentals, you follow fundamentals approach, and given this fact, in 5 years down the line, which sectors you are taking a bet on? Is it green energy? Is it what all sectors that you are very much following up and you will be putting in your basket?
See, I think electronics manufacturing is a very good sector to be in. You don't have many players, but we are seeing some good opportunities from the existing players scaling up because of the domestic demand, export opportunities. Likewise, I think defense is a very good sector where our own spending has increased, and then you are also seeing export opportunities, right? So we are going to see a lot of manufacturing in India. A lot of companies are going to come up into this sector because this sector will continuously have demand, considering how geopolitics is evolving, how countries want to capture commodities, and how countries are behaving. So defense becomes a very important piece in the puzzle and will gain a lot of traction. I think a lot of domestic consumption related sectors could also do well. I think infrastructure should also do well. This budget was all around infrastructure, and every country wants to now build its own infrastructure. So the kind of spending that is going to happen into this sector overall, it could be roads, it could be buildings, it could be bridges, it could be anything around infrastructure, right? Railways. I think all that infrastructure is going to do very well, and AI definitely is going to do very well, but we do not have many players in AI. So we are trying to find out a lot of proxy kind of opportunities that are there listed where we can make investments, as well as in our AIF we are trying to build in some of the unlisted pre-IPO opportunities where there are some like inroads into these sectors where we can invest.
Oh, interesting. Divam, you have expanded recently to Dubai as well, and a small case was there. AIF is there now, and now this DIFC fund. Why Dubai?
See, we wanted to become an institution in terms of a fund management house, and we started off as a very niche player into the industry, investing into the small and mid cap. And we have evolved over the years. We have served all types of investors. We have served small case investors, which are retail. We have served HNIs. We have served families, very large families as investors, very large companies as investors, and even NRIs. So overall, as a spectrum, we want to evolve as an institution. And I think the kind of growth that we are doing here, this is going to continue. Whereas what opportunities we saw was, we already serve a lot of NRIs, right? And we saw that because of the geopolitical disruption that is happening, a lot of NRIs now want to diversify their capital into India, because in their own home countries, like if you are in US, you think that, hey, what if I get laid off and what if I want to go back to India? What opportunities do I have? So even we are seeing a lot of NRIs investing into real estate into India, right? Likewise for the markets also, a lot of people want to diversify their capital back to India. And we wanted to give them a good structure to do that. I think with AI also, what would differentiate in our industry is the structure. And if we have a PMS license, if we have an AIF license, if we have a research analyst license, if we have a DIFC presence, so all that, the structures are going to create a difference in terms of what we are doing in this ecosystem. And over there, if you look at the onboarding becomes very fast. It is tax efficient.
Okay.
And people like that jurisdiction to come to India. So we want to ultimately manage funds in India and bring that capital into India and manage that capital into India. But we want to give that ease to the investors that, hey, whenever you decide to shift a part of your capital to India, you can use these structures to come. And hence we went on to DIFC, and there we are establishing a couple of structures. One structure would be pooling in capital there and would be putting in our AIF in India. Second structure would be helping pool in capital there and invest into pre-IPO opportunities in India. So the idea is to create that ecosystem which gives ease to investors, and that's why we went there. And I think Dubai, also a lot of Indians live there, and they have a lot of capital and they want to invest in a part of that capital into India. So Dubai is a very big market that we foresee to raise capital and for them to invest, as well as a lot of NRIs across the globe who can come through Dubai to India are there. So we are trying to capture them through this ecosystem.
Okay. So for them, is it the PMS access that you will be giving to them? Then the AIF as well. From the AIF side, you are selling or you are telling them about the pre-IPO companies. And from the PMS side, you will be helping them in the equity side.
Yes. So for listed equities, we are going to pool in capital and going to put into our AIF, and AIF will be managing that capital. As a single entry, the pooling of capital will happen from Dubai, and the local level documentation will happen, and that money will come into India. The second level of funds that we are creating will be pooling in capital in Dubai and will be investing into pre-IPO opportunities in India.
Okay.
We are going to target both listed and unlisted markets in India as a fund management through this ecosystem.
Okay. Divam, why there is a lot of confusion in the pre-IPO or these companies? Because there is less information out there in the public and people have not enough information about the returns or something like that. What is happening in the grey market right now? And how you are helping investors in the pre-IPO stages and how you decide that this company is actually good or this company is not performing well or something like that.
Again, we are not an angel investor or VC investor that we are taking a 7-year stance on the company. We're taking a 2-year, 3-year kind of a stance on the company where 1 or 2 years it will be pre-IPO and after that 1 year there will be a lock-in.
Okay.
So the thought process is that when you're investing with a 3 years window, you have to look at more of a possibility of the IPO and in certain cases you get liquidity in the market. But obviously as an investor, if you're investing into these companies, you have to take a 3 years timeline at least while investing.
So is there any company in your folio right now who has given you multi-bagger results in the pre-IPO stage?
There are a lot of companies and
why don't you give us details on that?
So that is past, right? Okay. Past is a past. Now I think for new opportunities you can invest in our AIF.
Okay, for sure. So I was recently in Mumbai. So there was an investor who has a allocation of like 5 to 10 crores right now. He wants to invest in the markets. He met me, we were having a discussion that why are you here? So he mentioned that, Rajat, I'm here for the learning purpose. What kind of learning that you are looking for? He mentioned that, Rajat, I have 5-10 crores and I have invested in real estate already and I have bought a few of the equities and I'm not aware, what is PMS, AIF and now SIFs also come into the picture and where I should invest in because these all allocations are totally different now. How do you advise those kind of investors, if they have that kind of surplus money which is in their pocket, where they should invest right now, how their asset allocation should look like?
See how things are evolving. I think real estate has gone very expensive. A lot of investors we see in this age have a lot of real estate, but they do not have liquidity. I think what differentiates you as a mindset, because in certain cases you need liquidity as well. A lot of these investors never plan for that. They start creating assets because a lot of their age have seen equities as a jua or a satta, right? Because they feel that it has not been making money for them. So real estate is something which is close to their eyes, which they can feel, touch. But the liquidity aspect is missing in those areas. So as a mindset, if you do not have liquidity, your mental freedom is not there, right? Even a lot of employees or a lot of salaried people we have seen is that they are earning well. They earn good capital on a regular basis, but they spend it all. Or at the end of the day, they do not have that kind of liquidity when it comes to a bad day, right? So I think having, first of all, liquidity is very important for anyone because then after a age, you might get medical expenses, you might get emergency expenses, you might get some eventual things like your kid's education or a kid's marriage or whatever coming up. So as a portfolio, India has more than 55% of India's wealth is in real estate, right? If you look at US, the percentage is fairly different, right? So I think you have to reduce your real estate weightage overall. As a diversification, you should have liquid investments in it. Some part of it could be 10% could be liquid kind of fixed income kind of investing where any emergency you use that capital and the rest should be in equities which is creating wealth, right? At the time of retirement, say if you are say approaching 60s or whatever and then you are almost retiring or you're retired, then gradually you can start moving from equities to fixed income more. But first of all, you have to not keep a very real estate heavy portfolio. Second, you have to have a 10% at least kind of allocation into fixed income. And then third, the rest of the capital should be into wealth creation assets, productive assets like equities. And you can keep it fairly diversified and basis your risk profile, you can invest in different types of categories of the market. It could be large cap, small cap, mid cap. You can keep it a diversified portfolio again there. You should have a diversified allocation overall.
Yeah, considering their age as well, no, like they can't play much more on risk, so they have to play maybe a safer bet as well in that,
Yeah.
right? So yeah, large cap portfolio could be there, something like that. Is it also what you are saying in the equity market? They have to put it major allocation into the large cap.
See, in the equity market, see, that depends. All the market caps would not go up at once. They goes up in chunks, right? Sometimes large caps would be doing well, small and mid cap would be silent. Sometimes small and mid cap would be doing well, large cap would be silent. So likewise, sometimes some sector would be doing well, sometimes some investing style would be doing well. So you'll have different phases of the market having different kind of opportunities. So you as a discipline, since if you are a passive investor, you can keep a diversified kind of allocation and do not try to juggle a lot between things. That's what also I have seen, that a lot of people keep on juggling. Every time they juggle, that thing stops performing and the other thing starts performing, right? So that's the rat race also. We see that a lot of investors invest in the market when the markets are at their top, and when the markets are at their bottom or there is a lot of pessimism in the market, nobody invests. So as a investor, you have to again be very disciplined, and again psychology plays a very important role in this.
Okay, interesting. A brilliant discussion happened on structured wealth creation from a short-term market noise, your journey, each and everything. It was wonderful having you, Divam, here. Thank you so much for being our first guest on this podcast.
Thank you so much, Rajat. It's a pleasure. And as always, I think you guys are doing great job and keep doing that. And I think you'll be really successful in this stint as well.
Thank you so much, Divam.
Thank you.
Thank you.
Thank you.